What's going on, traders? Welcome to today's live trading session with Octa. My name is Ambrose. Now, whether you're here for the first time or you're a returning trader, you're used to these sessions, you're in the right place, you know the drill. We're about to break down the markets, we're about to sharpen your trading mindset, and most importantly, we're about to get better as traders together. Now, before we dive in, and while we also wait for some other persons to join the session today, I need to know, where are you tuning in from? Where are you joining me from? Drop your city, your country, or even just some fire emoji in the chat. Let me know where you're joining me from or where you're tuning in from. So just like other live trading sessions that we usually have on this channel, today we're going to cover how to use the economic calendar to avoid some market surprises. We're going to do live market analysis. We'll break down the key currency pairs and look for potential trade setups that you can capitalize on. And most importantly, we'll talk about the trader's mindset, the three cores of trading: discipline, consistency, and patience. And I've also got something special for those of you that will stay to the end. It's an exclusive promo code that'll give you a 100% bonus on your deposit, but you gotta stick around for that and stay till the end. Guys, drop in the chat where you're joining me from or where you're tuning in from. All right. Hello, Miracle. Hello, Paul, joining from Port Harcourt. Let's give this a second. All right. Guys, trading isn't just about charts and numbers. It's about who you become in the process. The patience, the discipline, the ability to control your emotions. These are some of the traits or some of the features that separate those who become successful from those who quit in the Forex market. Every trader, every successful trader, every great trader that you admire in the market today once sat where you are, once started where you are, struggling, learning, pushing through, the bad days. But the only difference between them and the ones who gave up is they stayed in the business. So stay in the business. Today I'm going to teach you guys some amazing and important things that has to do with not just the technicals but also the fundamentals, because these are major drivers of the market. I see Sekrank from South Africa, Avin from India, Miracle from Abraka Delta State. Welcome, everybody. Like I said, I have an amazing promo code to give you guys at the end of this session, so you have to stay to the end. Let's do a quick disclaimer. Any opinion, news, research, prices, analysis, or other information discussed on this webinar or linked to this presentation is provided as general market commentary and does not constitute investment advice. Now, if you're just seeing me for the first time, I'm just going to go ahead and do a quick introduction of who I am. My name is Ambrose Ebuka. I have 5 years of trading experience in the markets, and I've honed my trading proficiency and contrived various profitable strategies that include swing and scalp trading. I also mainly analyze gold, GBP JPY, and GBP USD charts with an outstanding accuracy exceeding 85%, and I regularly backtest trading strategies for effectiveness. Now, what are we going to be doing today? What's the agenda for today? We're going to first look at the economic calendar, look at some of the major impact events that we'll be having today. I'll also go ahead to discuss the ZAP zone trading strategy, which is a strategy that I use, and we'll review the DXY. The DXY is the dollar index. I'll also go ahead to explain what that means. Let me see if you guys can still hear me. Okay. I'll also go ahead to explain what that means and how you can use your understanding from the dollar index to trade other major currencies in the market. And I'll also look at the correlation between the dollar index and other pairs as well, and then we can go ahead and talk about the 3 cores or 3 principles of trading. This session will last for about 45 minutes. You can use the YouTube live chat to ask your questions during this webinar. I'll periodically check it to answer or your questions, right? Now, okay, I'll just talk about the strategy, what is included in the strategy, and then we go check the economic calendar. Now, this section or segment of this session is very important for you, especially if you're just joining this session for the first time. The reason is because when I go over to the charts, I'm going to be using some terms like key levels, some supply and demand terms that you also need to understand. So if you don't know this, if you don't exactly know what trends are, what major levels are, minor levels are, market structure, pay attention to this section, and then so that when we go to the chart, you would understand properly. How many of us are ready to get right with it? Put some fire in the chat or type "I'm ready" if you are ready to get right into the session. And if you're just joining, this is the live trading session with Octa. Listen, guys, one of the biggest mistakes that traders make is thinking that trading is just about finding a good strategy. And I'm saying this because I'm about to show you guys the strategy that I use. And you know, if it was just mainly about strategy, everyone is going to be rich in this market by now, right? So in in addition to the strategy that I'm going to be showing you guys, there are also some extra important things that I'll be teaching you that you can align with your strategy and would help you, utilize the opportunities in the markets properly. Successful trading is not just about getting the best strategy or getting the holy grail strategy, but it's also about knowing how to read the market, not just following the signals or the charts. It's also about understanding economic events so that you're not caught off guard. It's also about mastering your emotions because even the best strategy won't work if you panic or revenge trade. And that's why today's session is very important. It's not just about throwing up some charts and some currency pairs, it's about building a solid foundation that would help you trade with confidence. So drop some "I'm ready" in the chat if you're ready to dive in. Okay, I see it coming in already. All right, let's get right in. What does this strategy consist of? First, understanding of market structure, right? Now, this is an interesting strategy because I don't just show you buy here, sell here. It's a strategy that encompasses everything that you need to execute an actual trade, right? Understanding of market structure and your understanding of market structure has to do with identifying, coming to the market and identifying the initial trend, being able to just perceive the market from the spot. So when you come into the market, let me just show you guys what I mean. So let's say, for example, you come into this market. From your understanding of market structure, if you understand market structure, you're able to identify this is what's going on in this market, right? The market was trending upwards and now we're beginning to range. In our last session, I explained to you guys what would make an uptrend, which is a higher high and a higher low. And then I showed you guys that before the market turns, you'd see some kind of consolidation or a pattern that tells you that the highs are not being broken anymore and the market is beginning to change direction. And that's exactly what we're seeing right here. But we'll come back to this. Let's take it one step at a time, all right? So your understanding of market structure, being able to just look at the market and say, these are the important things that I see. This is the trend. This is where this market is coming from. This is where I think it's headed. Your identification of key levels. The key levels are your areas of supply and demand or support and resistance. Most people would call it that. Supply and demand or support and resistance, your trend lines, those levels where it could also, by extension, get onto the moving averages as well, where the market bounces off or breaks above the moving average or below the moving average. These are important levels. That's why we call them key levels. They're important levels. They're significant levels. That's why we call them key levels. When we go to the charts, I'll show you what these key levels are, like areas of supply and demand like this, even all the way from this point. Guys, we've been trading the dollar index for months, like all the way back to 2022, down to 2023, 2024, and now 2025. Every single move we've traded. And one of the things that, doesn't stop amazing me is how this market reacts to these key levels, right? Every single level you see here is an area of interest for me. It's an area of significance for me. It's what I want to look out for this market when it's going up, when it's coming down. It's going to respect it. It would most likely respect it. And I have to create that indication that, or that awareness that this is a key level this is an important level and I have to be aware of it. All right, let's get back to. Okay, now you're able to spot the trend, identify where the market is coming from, where it's headed. You're able to identify the key levels, the most important zones where the market could make multiple retests or bounce. You want to predetermine your entry and exit points, right? Now, this can be a lot of things for a lot of people. From this strategy, you can refine to what works for you. For example, let's say you see a double top. Let me know in the chat, what's a double top? Is it a continuation pattern or a reversal pattern? If you know the answer, let me know in the chat. What's a double top? Is it a continuation pattern or a reversal pattern? Is a double top a continuation pattern or is it a reversal pattern? Let me know in the chat. Now, if you're joining us live and you want to, respond or participate in the conversation as I'm streaming live, you'd have to make sure that you're currently streaming from the current time. Okay, so you can fast forward till it gets to the end so that you can just, engage in the conversation in real time. Okay, reversal, reversal, reversal. Perfect. A double top is a reversal pattern, right? All right. So let's say you're coming from an uptrend and then you see a double top. What does that tell you? That the market is moving from the top to where? So the market is trending upwards. You see a double top pattern from, what does it tell you? The market is moving from up to where? So let's say the market is trending upwards like this. And then for some reasons, this highs have failed to break above, and then the market makes a double top like this, comes back down here. What does this tell you? That the market is moving from up. Oh, nope. From up to where? Exactly. It's telling you that there is a change in trajectory. The buys or the buy momentum is beginning to get weak, and this market could drop down to the downside. All right. Now, in that case, there could be a lot of things that you'll be looking out for. You could be looking out for a break or a retest at your moving average, a break and retest at the neckline of this double top. You could be looking out for momentum candlesticks that tells you it could be engulfing, it could be a shooting star, a candlestick that tells you that the sellers are beginning to get more in charge. That could be your confirmation. As a matter of fact, when you have at least three confluences are when you have three things that you want to happen and they happen at once. You can also call them stipulations. You have your indicators, indicators shouldn't come first, but I'm just adding that. You have your price action, momentum, and then your indicators, which I normally tell traders that this should be your final, level of confirmation. Your confirmation, as your indicator as a confirmation, should come last, not the first, because sometimes these indicators react a bit late to the market or to the price action. Now you want to determine your entry based on that, and also your exit points. So you're not just looking at, this is where I want to get this trade executed, but you're also looking at, this is where I want to exit if the market goes against me or if the market goes in my direction. Now, a lot of times I see traders execute trades and they just look at the profit side. They don't look at if the market goes against them. Sometimes they look at the stop loss area, put their stop loss, but they don't look at the profit side. They just look at the amounts that they make from that trade. So it's basically something like this. You execute a trade on gold and you're making like $500 from this trade. And you don't want to close the trade because you're saying, okay, let's just get to 1,000, let's just get to 1.5, or let's get to 550. Guys, your entry and exit points should be determined by market structure, market condition. The market doesn't care about how much you want to make. If you come into the market today and say, I want to make $500, I want to make $1,000, the market does not care about that. That's not what the market pays attention to. which is why most of the time you'd see traders, execute trades, and just by adjusting their take profit, like, okay, this is almost getting here, let me just adjust it a little bit, and then the market doesn't respect it, the market starts to drop. That's because the market doesn't really care about your dreams, your goals. The market cares about your consistency, your discipline, your ability to show up every day and be persistent, your ability to be patient. That's what the market cares about, and that's what the market rewards. All right. So keep that in mind. When you identify your entry, you also want to identify your exit point on both sides, in profit and in risk. All right. And I'm talking about risk, it brings us to risk management. You want to determine how much you want to put out on this trade, especially for beginner traders, guys. As a beginner trader, if you come into the market with the idea that you want to be trading without stop loss, the market is always going to go back. Guys, as a beginner trader, you would blow your accounts oftentimes than not. You want to first understand exactly how to manage those risks, and then you can refine your strategy to fit into your risk tolerance. But first, you want to understand how to manage those risks. The reason is because when you get into the market and you execute trades and you don't use a proper risk management as a beginner trader, when the market goes against you, stops you out, what it does is it reduces your confidence to even execute more trades. It also makes you feel less, it reduces your confidence, it makes you feel less comfortable. It puts you in that state of, I want to trade, but I lost the last trade, so I don't know if I should execute the trade. And what happens? Sometimes the market will go in your direction, and then your confidence is even reduced more. So whatever you do, especially as a beginner trader, you want to utilize strategies and use systems and approaches that would keep you in the market long enough to place more trades, long enough to figure out what works for you, and have incontrovertible evidence that this thing that works for me can give me consistent returns in 6 months, in 12 months. And then if you want to play around with your risk tolerance, then that's fine. But first, you need to understand exactly how to manage your risk. Now, this is what the ZAP zone strategy consists of. This is what is included in the strategy. As you can see, it's not just about buy here, sell here, buy here, sell here, support and resistance. No, it's everything included that you need to use to execute your trade. So let me know if you guys understand that in the chat, and then we can go over to the next one. Let me know in the chat if you understand exactly what is included in the strategy, and we can talk about the kind of strategies or the kind of traders that the strategy is suitable for. All right. Everyone understands. Now, what kind of traders is this suitable for? As you can see, we have all type of traders here: the day traders, the swing traders, the scalpers, and the position traders. Now, why do we have all type of traders here? The reason is because this is a zone trading strategy. What that means is every time frame you go to, you would always find an area of supply or an area of resistance. You must find a zone. You must find an area of supply. You must find an area of demand, rather. You must find an area of support. You must find an area of resistance in every single time frame that you go to. If you go to, let me share my screen and show you guys what I mean by that. Let's see if we have an MT chart. Let's give this 1 second to load up. Okay. So we're doing 15 minutes. All right. So if you look at the 15 minutes time frame over here, you would see that we have a key level here. We can also spot another one here, which is our current all-time high on gold. Another one here, right? If I go to the 4-hour time frame, same thing. If I keep zooming, we'll also see that there are areas where we can identify supply and demand, right? Now, even if I go to the daily time frame or the weekly time frame, let's do that quickly. You'd still see some levels. You know, if I still take my time, I would indicate other levels that we can identify on this chart. But this is just to quickly show you guys that regardless of your trading style, right? If you're the 5 minutes trader, the 15 minutes trader, the 1 minute trader, the day trader, there is always a zone. The market is always moving from zones to zones, right? But the idea is if you're going to be trading in the lower time frames, you have to go to the higher time frames to look at the overall direction of the market. Just like right now, we are on the daily time frame. If you know the overall direction of the market, let me know in the chart. Where is it headed? Is it headed up or down? What's the overall direction of the gold market? This is on the daily time frame, which is considered a higher time frame. So if you know the direction of gold right now, let me know in the chart. And this is what I call understanding market structure. When you're able to come into the market and even before analyzing anything, you're already seeing the direction of the market. That's a good step to understanding market structure. If you said up, you're not wrong, you're correct. The market is headed upwards, right? Now, with that bias, with that understanding, you already know that when the market is trending upwards, you want to buy at the lows, right? You want to trade with the trend. If you see anything that makes you want to trade against the trend, you just keep in mind that it's going to be for a short term. Let's say, for example, you want to capitalize on this, range that happened here, this pullback at resistance level. Obviously, you can see how short term this was compared to the initial push, compared to this as well, and compared to the follow up after that as well. So I'm not saying you can make a profit from buying or selling, even or selling an uptrend, but it's just going to be for a short term until you see a confirmed break to the downside. All right, let's go back to the explanation. So it's suitable for day traders. If you don't know what day traders are the traders that look to close their trades within the day, right? And at the end of this explanation, I would like for you guys to tell me what kind of trader you are. The traders that like to close their trades within the day are called the day traders. The swing traders like to hold their trades for a longer period of time, days, weeks, even up to a month or two. The scalpers look to enter the trade and exit the trade within minutes. They're just in and out of the market, just get in, get out of the market. And the position traders look to hold their trades for a longer period of time, right? We're talking about months, we're talking about years. They hold the trades for a longer period of time. So based on this definition, what kind of trader are you? Based on my explanation on these 4 types of traders, what kind of trader are you? Um, for you guys asking questions in the chat, we're going to have a Q&A session where I get to answer your questions and also, maybe ask you my own questions as well. So we're going to answer all your questions. All right. But from my explanation, what kind of trader are you? Now, when do you use the ZAP zone strategy or the zone trading strategy? You use it during volatile sessions, right? A volatile session can be an overlapping session, where two um, time zones or two trading sessions overlap, like the New York session, that overlaps with the already open London session. And then we have after major news events, not during, but after, because during major news events like NFP, CPI, you could see market volatility. You could see, how wildly the market would move up and down, and you don't really get any trend out of that. Okay, so you wait for the market to settle down, look at the direction of the market, and then you start to identify um, areas where you can, or these key levels where you can capitalize on. All right, I see day trader in the chart, day and swing. Simisola wants to start by being a day trader. That's good. I see scalpers. Oh, someone said all. And if you're wondering if it's possible to be all kind of traders or to have all trading styles, it's actually very much possible. But it takes a lot of experience in the market to actually be able to look for opportunities in the lower time frames and the higher time frames at the same time. Just a lot of practice rather. If I say experience, it makes it look like 10 years, but you can literally just practice these things in a year, practice it in a short time and understand exactly what type of trader you are and how you can also capitalize on other, trading times. All right about now, we're going to get into one of the most underrated tools in trading, the economic calendar. Now, if you're trading without, checking the economic calendar, if you're basically driving with a blindfold on. So I'm going to go ahead and share my screen and show you guys the economic calendar and also give you guys a brief on how to use it and also, explain some of the things that we have here so you guys can understand exactly how to use the economic calendar. So if you don't know, the economic calendar is very important. It's like you understanding the fundamentals when it comes to events, trading, and how to analyze. So whenever you hear fundamental analysis, this is what we're talking about. Basically, trading the news. And the economic calendar is very important because it helps you anticipate market movement instead of just reacting to last minute. It also helps you avoid trading right before a major news event that could, destroy your stop loss. It also helps you strategically plan entries when the market is most favorable. It's like already knowing what's going to happen based on a decision from the central bank of a country. And then you see the markets act towards that, and you just get that extra confidence or extra comfortability to execute that trade. All right, so we're going to start with the trade balance. But before we do that, guys, if you're going to be using the economic calendar, please make sure that your time zone is set to the current location that you're in so you don't miss out on the events. And you can also use high impacts to just focus on high impact events like I do. But if you're new to these markets, you can click on medium and low to include medium and low impact events for the knowledge. All right. That said, let's get right into it. So, the first event we'll be looking at here is the Australian trade balance, MOM, month over month. Now, if you don't know what the trade balance is, it's simply the difference between a country's exports, that's the things that the countries sell, or the things that this country sells to other countries, exports, and the imports, the things it buys from other countries. So it's the difference between a country's exports and a country's imports. Now, if the exports are greater than the imports, it means that the country has a trade surplus and is good for the economy. If the country is selling more than they are buying from other currencies, from other countries rather, it means that the country has a trade surplus and is good for the economy. But if the imports are greater than the exports, if the country is buying more than it's exporting, it means the country has a trade deficit, and this can signal economic weakness. Now, for Australia, which is also going to impact the Australian dollar, a strong trade balance usually supports the AUD, the Australian dollar, because it means that more foreign money is flowing into the country through exports. So what happened today? Before I even go ahead and get into that, let me know if you guys understand trade balance, the explanation of trade balance. Let me know in the chat if you guys understand the explanation of trade balance. So what happened today? If you look at this report, you see that the Australian trade balance or Australian trade surplus, which was what he had, it shrunk in December, moving from 7 billion to about 5.1 billion, which is lower than the expected 7 billion. Right? This is the forecast, this is the previous, this is the actual. Also, I need to explain this to you guys. When you're reading the economic calendar, you have to understand that previous tells you the report, the previous report for this event. Forecast tells you the forecast from economists, from analysts, and actual is the actual report, or the actual report as this event is being released. Now, as you can see, the actual is less than the previous. Okay, so when you want to analyze, you're looking at actual and previous. The forecast can just give you an indication of what's going to happen, but when the result is out, you want to compare actual to previous. And if you look at this statement here from Octa, it says, if a steady demand in exchange for Australian exports is seen, that would turn into a positive growth in the trade balance and should be positive for the Australian dollars. But we got a weaker actual report or a weaker actual release compared to the last, so this would not bring about positive growth in the Australian dollar, but it is expected to reduce the value of the Australian dollar, because what this basically means is that Australia imported more than it exported. Let me know if you guys understand in the chart. Let me know if you guys understand the trade balance in the chart. So what I want you guys, the key takeaway, or what I want you guys to basically get out from this analysis is more money went out of Australia to buy foreign goods than expected, right? Remember, when Australia is importing, it's okay. Guys, if you have any questions, please, you can ask your questions in the chat, and there will be a session where I answer, or a section of this session where I answer your questions. So, like, as I was saying, guys, if Australia is exporting more than it's importing, it's good for the economy. But we didn't get a trade surplus here. As you can see, we got a lesser report than the previous. What it means is that the imports are greater than the exports, and that is going to bring about a deficit, or what we call a trade deficit, or it can signal a devaluation or economic weakness for Australia. Let me know in the chat if you guys understand. So if you're going to be trading AUD pairs like AUD USD, AUD CAD, we're also going to pay attention to that because the dollar is currently trending lower. What that would mean is that the Australian dollar would be trading upwards for now. But we'll check the charts and look at the key levels and what to expect from these key levels. But based on this report, this is not good for the Australian dollar. But that's why you have your combination with technical analysis. All right. When you look at what's going on with the fundamentals, you want to also compare the currency that you're trading. So if you understand this is what's going on with AUD and you're trading AUD USD or AUD CAD, you also have to look at the other side. What's going on with USD? What's going on with CAD? How do I, compare the strength and weakness of these two economies, and which one do I capitalize on? But keep in mind that for the trade balance, when you see a report that the export is greater than the imports, is good for the economy. All right. And if the imports are greater than the exports, if they're importing more than they're exporting, it can signify or signal economic weakness, which would be bad for the currency. Okay, everyone understands. Let's talk about the euro retail sales. When you see YOY, it means year over year. Now, if you don't know what the retail sales means, the retail sales measure how many people or how much people are spending on goods like clothing, fuel, electronics, food, and it helps you as a trader understand if the consumers are confident and are spending money or if they are holding back. Now, if the retail sales go up, it's a sign that a lot of people are, shopping, businesses are making money, and the economy is doing well. But when the retail sales go down, it can mean that people are cutting back on spending, which can, signify a certain level of economic trouble. Now, if you look at the reports that we had today, you'd see that the actual and the forecast are actually the same thing. And this latest report gave us indication that the Eurozone retail sales increased by 1.9% as compared to last year. Remember, this is year over year. What does this mean? It means that more people or people spent more in 2024 than in 2023. And businesses, a lot of businesses saw increased sales compared to last year. And also, another important thing is consumer confidence, which this also shows us that consumer confidence has been improving, despite the economic challenges. Another way to understand this economic event is when you come to the Octa economic calendar, you can just click on it, and then you see a definition right here that tells you what this economic event is all about. And then you come down here, you'd see generally a high reading is seen as bullish for the euro, while a low reading is seen as bearish. Now, obviously, you can see that we had an actual report of 1.9, which is greater than the previous 1.2. Let me know in the chat, is this a higher reading or a lower reading? The actual report, is it higher or lower than the previous? Let me know in the chat if you know the answer to that. Is the report higher or lower? Is this a higher reading or a lower reading? Let me know the answer in the chat. The euro retail sales year over year, we had an actual report of 1.9, which is also the same with the forecasted report for 1.9. And then we had a previous for 1.2. So is the actual greater than the previous, or is it less than the previous? Is the actual reports here greater than this, or is it less than this? Let me know if you know the answer in the chat. And if you don't know the answer, you can just let me know also in the chat that you don't know the answer, and I'll go ahead to tell you guys what it is. That's why you're here. You're here to learn, and I'm here to show you exactly what it is about this markets, about the economic calendar as well. Okay. To understand if it is greater or less, first you have to look at the definition, and then the important sentence in this definition is over here, where it says, generally, a high reading is seen as bullish for the euro, while a low reading is seen as bearish, right? Now, obviously, 1.9% is higher than 1.2%. So that makes this a high reading, because it's higher than the previous, right? It's higher than the previous report. It makes this a high reading, and it's a potential, it's potentially bullish for the euro. Let me know if you understand now in the chart. And then we can go on to talk about the GBP, well, the loads of reports that we've had from the Bank of England today. Let me know if you guys understand the retail sales in the chart. So today was a big day for the UK economy because the Bank of England, made some important announcements that can affect your trading, and even your everyday life. So we're going to break it down in simple terms so you guys can understand better. So what happened today? The Bank of England, cut interest rate by 0.25%. bringing it down to 4.5%. You can see here that the previous was 4.75, and they had that rate cut by 0.25%, bringing the actual report to 4.5. Now, what does this mean? In a general term or in a general scheme, it means that it's now cheaper to borrow money, loans, mortgages, business loans. It also means that people and businesses may spend more, which can boost the economy. But if too much money is flowing, it could also cause, higher prices and inflation. So the Bank of England is trying to balance economic growth without letting inflation out of hand. Now, if you don't know what monetary policy report is, I'm going to explain it to you guys to understand better, because these are the major things that drive the market. These are major market drivers. I mean, there are a lot of other market drivers like the volume and all that, but the fundamentals is a major market driver, and it's important that you understand it better. So, monetary policy report, you should think of the report as a kind of health check for the UK economy, right? Kind of a health check for the UK economy. The Bank of England releases this report to explain how the UK economy is doing and what they expect in the future. All right. And then we have the MPC, which is the Monetary Policy Committee vote rate. We had a forecast of one vote expectation to be unchanged, but we didn't get anybody voting for it to be unchanged. Rather, we had 9 votes that goes in favor for the rate cut, and obviously that's why we had a rate cut today. We had 9 votes, in support for a rate cut. Okay, so what this basically means is that nobody voted to keep the rates the same way, and also nobody voted to hike the rates or increase the rates as expected. What this tells us is that the Bank of England is focused on helping the economy grow rather than worrying much about inflation right now. Okay, so let me know if you guys understand the explanation on the reports from the Bank of England. Let me know in the chat, and then we can go over to the live trading. Oh yeah, and we also had a speech from the Bank of England's Governor Bailey, and some of the key takeaways. Some of the key takeaways from this speech is that the Bank of England expects inflation to go up in the short term, but they don't think it's going to stay high for too long, and that they will take things slowly and carefully before making more rate cuts in the future. So in simple terms, they're just being cautious. They want to help the economy, but they don't want to cause chaos in the markets. Let me know if you guys can still hear me. Okay, I wasn't seeing the live chat for a second, but I think I can see it now. Okay, Bakar, what do you want me to explain again? What part of this analysis do you want me to explain again? Let me know. Guys, I'm constantly checking the live chat to see if you guys have any questions. So make sure that if you have questions or any concerns, you can always put it down there. I'm constantly checking to address your concerns. So after looking at the economic events, you want to watch the market reaction. Sometimes the first move after a rate cut might be reversed. So you want to wait for confirmation before jumping in. You also want to compare this report with other countries. For example, if the US keeps the rates high while the UK cuts, GBP USD might drop. If Europe is also cutting rates, GBP Euro GBP might stay stable. So you want to look at inflation reports as well. If inflation rises faster than expected, the Bank of England might also change its approach. So these are some of the things that I want you guys to do after analyzing, fundamentally or analyzing economic events. What about now? We're going to go straight to the charts and look at the dollar index. Now that Okay, okay, everyone can hear me. Perfect, perfect, perfect. Now that we have a solid understanding of what's going on in the world's economy, let's analyze some charts. We're going to look at some, major currency pairs. We're going to start with the dollar index. We'll identify some key levels and see if there are any potential trade setups. Remember the approach we're using, guys. Understanding market structure, identifying the key levels, identifying entry and exit, and proper risk management that has to do with our stop loss and potential areas for take profit. All right, guys, what's going on with the dollar right now? You can clearly see that the dollar has been trending upwards, but right now we're seeing some kind of rejection in the dollar at this level, which is the 109,110 level. You're seeing the market try to break above once, or actually twice, and a potential retest here, but couldn't make it to the top. Couldn't break above that. Came back up here to make another retest. Tried to break above, but couldn't break above this as well. Now you'll be wondering, why is the dollar dropping? Why are we seeing, is a significant decline in the dollar right now? First, you have to understand that in an uptrend, when the market makes, significant moves to the upside, there is this, it doesn't just spike all the way up, right? You have a high and then you expect it to have a higher low, another high and a higher low, right? Another thing to look at is the Federal Reserve's, the Federal Reserve have been raising, interest rates. Now you have to think of the dollar like a savings account. To understand how the dollar works, you have to think of it like a savings account. Think of the dollar like your saving account. When the Federal Reserve, the US Central Bank raises interest rates, what happens is investors want to hold more, US dollar. They want to invest more US dollar because they can earn more interest, and this makes the dollar stronger. But when they lower interest rates, the dollar becomes less attractive because investors don't get as much return, so it weakens. And right now, the Fed has started to lower interest rate, which is making the dollar weaker. We're also seeing, what's going on with I'll call it the de-dollarization. People, some countries are moving away from the dollar. We're seeing the emergence of BRICS. Many countries like China, Russia, they're trying to use their own currencies instead of the US dollar for trade and international payments. What this means is less demand for dollars globally, which can also cause its value to drop. And the obvious one would be the trade policies and global trade tensions, right? Imagine if your favorite store changed its prices every week. It's going to create some kind of uncertainty for you, right? The US government has been making, trade decisions, adding, removing tariffs, and this uncertainty makes businesses and investors nervous, leading them to sell the US dollars and invest in other currencies. So when fewer people want to hold the dollar, the value drops. All right. So let me know if you guys understand exactly. Someone said the chart is too rough. Let me know if you guys understand exactly why we're seeing a significant decline in the dollar right now. Oh, don't look at this. This is just an illustration that I made here for higher high and higher low. But then if you're focusing more on what's going on with price action, then you'd obviously see that most of the lines that you see here are key levels, which I'm also going to explain, which you can also use in your trading, right? Now, currently the dollar market is sitting at a key level. This key level is significant because we can trace it all the way back to this point, right? And you can see that this also served as a key level for the dollar at some point in October 2023, in November, and November 2024. A breakout point in December served as levels of support in still December, January again, and now February, right? So this makes this zone significant for the dollar. What this basically means is if we get a break below this level, which the market is testing right now, it's going to signify bearish or strong bearish momentum on the dollar. Now, if you're trading pairs like GBP USD, Euro USD, AUD USD, you'd be looking to sell the dollar across these pairs. If you're familiar with chart patterns, right, you'd see something that we call a double top, right? Now, in a double top, let me just take this off so you guys can have some chart clarity. So we have the first top, we have the second top. And in a double top, there are three things to take note of. The first top, the second top, and a neckline. The neckline serves as area of support, which is this area right here. From a strong trend like this that's headed upwards, if we get a break and a potential retest at this neckline and a rejection of that retest that indicates bearish momentum, we're going to see the dollar index trade all the way to this level, which is the next swing low and the next area of interest, or the next key level for the dollar index. So that's what's going to happen if we get a nice break below this point. We're seeing the market already sitting and retesting that level. And if this happens, you want to buy GBP to sell USD. Same goes for Euro and the Australian dollar. The Australian dollar could be a mix. We'll get into the Australian dollar later, but mainly GBP USD and Euro USD. So what happens at key levels is when you identify key levels in the market, you don't want to be ahead of that level. So for example, what usually happens here is because this is a key level, the market reacts to it in different ways. It has served as resistance, it has served as support, right? We're not going to assume this area to serve as support and start buying the dollar across other pairs. No, we want to see some reaction. We want to see the buys create an engulfing candlestick, or a candlestick that closes below this previous bearish candlestick and a follow-up candlestick. That could signify bullish strength. Then this becomes a bounce. But if we don't see that and we see the market push further down to this level, which is also minor support level here, then we're expecting a break because the bears are in control or in charge of this market. But again, you don't just go ahead and start selling the dollar. You want to see that confirmed break. You want to see that close below this key level and a bearish momentum follow up that indicates that this market is going to trend to the downside for a while, and you can take advantage of that. This is the daily time frame. So what that means is you want to be looking at your profit targets in days. You want to be looking at 2, 3, 4, 5 days. If you get a break, or even more than that, it could be up to like 6 days if you get a break for it to get to this downside. Let me know if you guys understand now. It's the daily time frame. Someone's asking what time frame this is. This is the daily time frame on the dollar index. So the dollar is still the world's most used currency, but things are changing. We have to keep our eye on interest rates, on global trade, and also we have to pay attention to how other countries rather are shifting their money strategies. Another commodity or instrument we'll be looking at is gold. Gold has been breaking records this week, reaching an all-time high of 2,880. And if you're wondering why gold is going up, so much, I mean, look at how many times we broke this all-time high about 3 days ago, and since then, gold has just been pushing to the top side. So if you're wondering why this is happening and what it means for traders and investors, I'm going to go ahead and break it down for you guys in simple terms. But before I do that, let me know if you guys understand the dollar index analysis, all right? Let me know if you guys understand the dollar index analysis. What's the reason for gold having the occasional large red candlesticks? Okay, like I said, guys, in an uptrend, right, the uptrend consists of higher highs and higher lows. The market doesn't just move upwards straight up. It's like you're running a marathon. At some point, you have to catch your breath and continue your journey, right? You relax a bit, continue your journey. When the market moves to the top side and creates higher highs and higher lows. When the market moves to the top side and creates higher highs, pushes back down a bit to create higher lows. One of the ways that you know that this pullback is not solid or valid is when you see that these candlesticks are not engulfing. They are more like candlesticks that are struggling, and then you see momentum bullish candlesticks that take this all the way to the top side. As you can see, struggling, bullish momentum, another bullish momentum, struggling candlestick, bullish momentum. Right? These candlesticks are that don't show you bearish momentum, they just. And then when you see candlesticks like this that look like an engulfing candlestick, what comes to mind is, where is the next key level that this market could retest? This is the next key level. What happens at this key level? Do we get a break? We didn't get a break. We got a bounce and a push to the top side. If we got a nice break below this key level, the next place we're targeting is here, but we didn't get that. And what happened? The buyers pushed gold all the way to the top, and we had bullish momentum candlesticks after that, and it just basically continue that way. Now, if you don't know, gold is a safe haven asset. It's known as a safe haven asset. Someone doesn't understand. Tell me what you don't understand, and I'll go ahead and explain it perfectly for you. So gold is known as a safe haven asset, which means when people are worried about the economy, they buy gold to protect their money. And right now, with the trade wars and tensions going on, there's a lot of uncertainty in the world, high inflation, the US dollar weakening, stock market volatility, prices going up and down unpredictably. There's a lot of uncertainty, rather. And since gold as a commodity holds its value better than paper money, investors just go ahead and rush to buy it when things feel unstable. And what happens? This pushes the prices of gold upwards. We also have central banks like the Federal Reserve, Bank of England, China's central bank as well, buying more gold to store in their reserve. And when this happens, it reduces the amount of available gold in the market. Less supply, high demand equals higher prices. All right, I want you guys to also understand that. Okay, understood. Understood. So what's going on with gold right now, and how can you take advantage of this momentum? If you notice, let me just give the indication of the all-time high, which has also created a potential area of retest on gold. Like I said, when the market makes impulsive moves like this, we get a pullback, we get some kind of consolidation, and another, momentum that either takes it to the top side or gives us a break. Obviously, you'd see why the gold market bounced here, because we also had like an area of market movement here, as you can see, and then the push to the top side. This has served as a level of support. This is also the next level of support, which gold almost retested today. Now, if you're going to be trading the gold market, this may not be a good time to buy because we already created an all-time high. We want to see how the market breaks out of this and potentially retest before we can continue to buy gold. But right now, I expect some consolidation around this point and a potential drop down on gold in the coming weeks. Obviously, we want to keep an eye on this zone. This is our most recent key level. Just going to indicate that for you guys. This is a level we want to keep an eye, or a level we want to observe. And if you don't know, this is on the 4-hour time frame in the gold market. So if I'm looking to go short on gold or sell gold, I want to see this bearish momentum sustained all the way up to this point and close below. And then I'll expect the gold market to drop down to 2810 levels and potentially all the way down to this point. But just so that you're not caught up in a ranging market like this, you have to look at market action at this level up here and this demand level down here. And that can give you an indication of what to do next. But currently gold is in the middle of this high and this low, which I expect a consolidation for a while before we get a break to the downside. Okay. I don't understand the dollar index analysis. So I'll just do a brief explanation on that again. And all right, so like I said, the dollar index has been trending upwards, but currently we are seeing some consolidation. And usually when this happens, it means that this strong uptrend is beginning to come to an end, and you should brace up for a potential retest to the downside, a potential reversal to the downside. Why is this important? If you notice, you'd see that the highs that were created here was not broken above, rather the lows are becoming to be broken. So if you have an uptrend and it gets to a point where the highs are not broken anymore but the lows are being broken, it means that that uptrend is about to change trajectory to the downside. But we're currently at a key level in the dollar index. We want to see how the market reacts here. We want to see a nice break below this level, and then we know that the dollar index is going to trade all the way down to this point in the coming weeks, and we capitalize on that. Let me know if you understand the dollar index analysis now. Let me know if you understand the dollar index analysis now. So before we wrap up, let's talk about something that separates great traders from the traders that kind of struggle. And those three things are discipline, consistency, and patience. I like to call them the three cores of trading. Most traders fail not because they don't have a good strategy, but because they lack discipline. If your trading plan says wait for confirmation, but you FOMO into a trade, FOMO is fear of missing out. That's not the market's fault. That's lack of discipline. So discipline is important in trading. Consistency as well. You cannot expect results as a trader if you're switching strategies every single day. The best traders stick to their edge, refine it, and stay consistent. You have to track your trades, journal your trades, look for what works and what doesn't. And you have to show up every day to these charts to learn and understand. You have to be consistent. And the third one is patience. Right? Some of the biggest trading mistakes happens when you force trades. You want to trade every session. Patience is knowing when to sit out and wait for high probability setups. Okay, but if you keep chasing every market move, then the money is just going to keep running away from you. So discipline, consistency, and patience. These are the three cores of trading. Now, if you're looking to get started with trading after this session, there's a link in the description that you can click to get the Octa trading app. This app offers a wide range of trading instruments with low spreads, fast execution, and zero commissions. It also has a lot of educational resources, 24/7 customer support, and a strong commitment to funds and data security. Like I said, the link is in the description. After this session, you can always you can use that to download the Octa trading app, and remember to come back to the Octa Broker YouTube channel to get the education you need to navigate through this market. You can also find the webinar section in the Octa trading app as well. But to access that, you need to get the app, and the link is in the description. If you made it to this point, congratulations. You now have the promo code to get 100% bonus on your deposit. Ambrose E100. There's an E after the Ambrose and then 100. And you can take advantage of this promo code in 5 steps. You open the Octa Trading app or visit the official website. You go to your profile, find the promo code section in the menu, type in the promo code Ambrose E100 and click on activate. You can make your deposit and enjoy your bonus. And you can withdraw your bonus to your trading account or even to your bank account after trading a certain volume. It's going to be indicated there while you're making the deposit. So today we talked about the ZAP zone trading strategy, the components, suitability for traders, and applicable scenarios. We looked at news trading, understanding the economic calendar. We talked about the Australian trade balance, Euro retail sales year over year, and all the amazing and lots of important news that was released or reports that was released by the Bank of England today, including the speech by the governor of the Bank of England, which is Governor Bailey. And we also reviewed the strategy on a live chart during this session. Some of the key takeaways I want you guys to get out of this session, and like I said, guys, learning never stops. You have to create that awareness as a trader that you're always going to learn. And there's always, the market is evolving. There's going to be new things to learn. There's going to be new things to want to grasp to improve your trading. Analyze trading instruments to understand how they behave under various market conditions. Review your actions and reflect on your decisions to identify what worked well and what can be improved. Keep up with the latest market news and updates, and use the educational resources that you have on the Octa trading app and also in the YouTube channel to enhance your understanding of trading strategies and tools in the Forex markets. Now, if you've got any questions, you can go ahead and ask me your questions. I'm looking at the live chat right now to see if you guys have any questions. And while you're typing your questions, I'm going to ask you guys, a question. For those of you that don't have any questions, keep your hands busy. What are the 3 cores of trading that I said, a few minutes ago? I said there are 3 cores of trading, 3 important things that I think every trader should be good at. What are those 3 things? If you know the answer, let me know in the chat. Let me know in the chat if you know the 3 cores of trading that I just explained right now. If you don't see the link, when you click on the when you click in the description, you'd see there's a link after start trading. That's the link you want to use to get the Octa trading app. There's also going to be one in the live chat. You can just scroll and check. Okay, Akinola says discipline. Dish says discipline, consistency, and patience. Adoye says discipline, consistency, and patience. Hassan says consistency and patience. All right. Well, okay, Stanley says discipline, consistency, and patience. Now, it's amazing that you guys got the 3 cores of trading alongside your understanding of fundamentals, market analysis, and now you have this that can also help you boost your trading abilities. Guys, we value your feedback, so take a moment to fill out our survey. Your feedback is very important for us to improve our future live sessions and webinars. It's only going to take 1 minute. You can use the link in the description, or you can scan this QR code to give us your feedback. This was an amazing session, guys. And I want to remind you, or I want you to remember one important thing in trading. Trading is a long business. It's a long-term business. Okay. The market rewards those who are disciplined enough to wait, skilled enough to execute, and strong enough to endure. Success in trading doesn't happen overnight, but if you stay consistent, if you stay patient, and if you keep refining your edge, you'll become the kind of trader that others look up to, the kind of trader that doesn't just make money, but masters the business. So go out there, apply whatever it is you've learned, and trade with confidence. The journey isn't always easy, but it's always worth it. So stay disciplined, stay consistent, and keep making potential profits in these markets. I'll see you guys in the next one. If you want to rewatch these videos, you can always come back here. It's going to be saved. You can watch it and understand.